Good morning, MMTs. I don't have your platform up. Prior to this video coming, though, we looked in our brain and we looked in our platform to see where the upper targets would be. What I'm going to be teaching the new MMTs as a market maker is totally different than a public trader or the public in general. And that the standard technical analysis is where the broader part of the public community is going to make their decisions. One of these decisions is this blue bar is called a monthly buy. It's called moving average convergence divergence. And when it gets above the 0 point right over here, that is what we call a monthly buy signal. And that's what your bigger institutional traders and hedge fund managers and money managers and advisory services are looking at. Well, we're back out of the woods. And then they all get on the same thing, MMTs. And we've had where the minute that we started to get that monthly buy signal right here, we've gone up slightly here, slightly here, slightly here, and slightly here for 4 months here. And we've had a big 3-month rally off of this narrow range monthly bar here. But we continue to go higher. And the community out there on standard technical analysis, the bullish things about these crossovers, they're all bullish because that's what they live for. And that's what that community is taught. However, as I say, for the new MMTs over here, it's quite the opposite. When you get over here in 2008, when the blue bar right here, that's called a monthly sell signal, you torpedoed down to all-time lows. Once we hit that bottom down here and couldn't go lower, and we started to, this is where you would want to be a buyer, down here. And they start to ascend gradually and incrementally month over month. It means that the bottoms are in, and you can see the deleveraging trend to the downside, and now you're able to see the re-leveraging, that means to the upside. And remember, MMTs, public behavior within the Wall Street transaction tape called public behavior equals their transactions, is that's where we get crowded and we move. This is a very bullish setup for them because of that monthly buy signal. That means that when we do get some corrections, that people are still living, the bears are still thinking this is going to happen right now and that we're going straight down. Not the case. Not at all. That's their shortcoming. Okay. The bull, on the other hand, is going to be exuberant, and these monthly buy signals can keep going. This is going to be the top of that trend right up here at 12,647 handle. That's the top of where the monthly breakdown bar started in 2008. This is where it got nasty, but that was during the financial crisis. This over here is now the new turn of the bull crisis, meaning that the bull gets exuberant. That's fine. It's showing up in the standard technical analysis indicators that these people make decisions on. So when we blow this part of the chart, 13,000 is up here. Okay? And basically half of this big monthly down bar right here, we are taking that out in February. And we're above it. And that's bull move for the bulls. And that's a good thing. What we will do is continue to take it as high as we can, and watching the divergence continue to peak. I will tell people on the Dow monthly chart that you have not been this overbought since Carter was around. I'm just kidding, by the way. You're 92.03% DS overbought. And the other thing here on this monthly CCI, which is not final, the last month was 174 down here. We're at 167 right here. That means that we're not going higher in the commodity channel index, which is part of what they look at when they're making their decisions as a public trader, where you're a market maker on that everyday compounded daily level. Taken away from the public is what you do. What I am going to say is we can continue to go up here. As I said a few weeks ago on our analysis, that you could hit that 13,000 on the Dow. That's going to be right up here. People thought that we were too overbought at 12,000, which we are, but Complacency, you can stay overbought for a period of months. And that money on the sideline is working its way into the market. And that's the problem for the bear, and that's the good thing for the short-term bull. Eventually, though, because of that percent DS, this is this green column down here at 9203. That thing there is only going to go so high. I have never seen in the 30 years I've been doing this, or ever since, that this particular indicator that the public likes to read on has had any significant. There's never been one that can stay up here this high. And eventually they collapse. And you want to bet you any amount of money. And the thing about it is, when we were up here at the highs of this market, this is a monthly thing that we would be looking at. We were 88% right over here at that time. We've taken that level out, MMTs. This is where, let me just pull up this part of the chart. This is where that monthly bar was narrow range doji of indecision of what the public looks at. Well, maybe it will go higher, but how do I know? Well, in their standard way of doing things is that it starts with the gap down. It never gets back above the body. That's where it started. It stayed there. That's where the trend started going down. 2008 financial crisis, this was a high. I can show you here that we were overbought at that time at 88.91%. Now, we are, and that was the top of the market. And I was telling people at that time, I'm short. And I was. And over here, on the other hand, this one here, in the current cycle, and everything runs in a cycle, it's 92.03. We could go up to 96 on this thing. That's going to be the extreme. And if it does get there, that's about another 4% on that percent DS, is one thing will happen. The blue bar, the moving average convergence divergence, one thing that we did was that we taught hedge fund managers about how to use mathematical equations between monthly moving averages and crossovers and all kinds of things in our career. And we can stay up here elevated in these readings, standard public readings. This is how they make their decisions. You make your decisions totally different, though. But you have to be trained on what the general public does and how you're going to take the general public's money. And we can continue to be overbought. This is where the next part of this breakout to the Dow, when it was at 12,000, we went below it. I said, hey, wait a minute. You could go up to 13,000 before you really get overbought. You're already overbought, but that would be the extreme. So what we're going to be watching is what the public is going to be doing. And we're going to be watching this bar right here, this top right here, this lower end compared to the current cycle on the Dow. The Dow is overbought. They need to correct. They will when the bull money comes off the table. And let me tell you another thing, MMTs. It's been my experience in all the years and all the accuracy. Remember that we put and point and we call our trades out long before the move ever happens. That's why people like stock market funding, because we're not sitting there like a pundit saying, oh, gee, now's the time to get in. Well, the move has already happened. And that's when you start looking at taking it short. So we're extremely overbought. Complacency is very complacent. Lack of fear in the market. I've been instructing people how to buy different instruments just in case there is a quick reversal, and we're going into options expiration next week. This is the history of the current Dow trend between the bull and the bear. And what an SMF MMT market maker does on a daily compounded level and weekly level, but more so, is understanding how do you make money against the public. So the majority of the people are always wrong and always have been. It's the very, very, very minute or diminishing or contraction of certain people when you're in balance between the bull and the bear count. The lower, anytime that the bear count is below 20%, that's when most of the market is in, that's when most of the money is in the market. When the bull count is extremely high, but what do we look at is that bear count. The bear count, percentage of bears, percentage of bulls. When the percentage of the bears are very, very, very little, that's when most of the current money in this particular February period or this particular bull cycle period is reached the market. It's in. And the thing about it is, the reason why it's going to be a little bit harder to keep going higher and higher is because once all the money is in the current cycle, well, then that's a perfect time where we start to look at where the pullbacks would come in on the Dow. And this is a very good video for you because you're going to see exactly how it all happens. And it's very bullish for the bulls. There's nothing bearish about this 6-month breakout at all. No one is saying there's nothing bearish about it. But however, there will be, like there always is, at a certain time, all the money's in and we're going to have a pullback. And because of the monthly buy signal, whenever the bull gets a pullback, you're just like you got a pullback here, bam, he was in. You got a pullback here and you start it up again. That's been the theme, because the theme for that group of people in New York is they got to perform. They can't let money sit on the sideline. They got to get it in there. So when we do pull back with the monthly buy signal, those pullbacks will be there, but then you're going to see another round of money come right back in and that bull trend will keep right on going again until we finally peak out on the cycle. But the pullbacks will be viable because of that momentum. Just like upside momentum, you have to build it. The downside momentum over here in 2008, and we went straight down to the bottom of the river, that weakness builds the same way as longer term strength builds. So when all the weakness got out, we rallied. Well, over here, when all the bulls were in, and I remember, with some MMTs that were here, and a lot of our, people that have been with us for a number of years know what the truth of what I'm saying is. And the thing about it is, this one up here, we peaked, we started to descend monthly, and that's where weakness would be in. The opposite is happening now, finally, and we have a certain amount of strength in the market. And because of that monthly strength, the pullbacks is where you're going to want to be buying the leadership, because that money will continue to come in. We're overbought on the Dow. We got an options expiration. Everyone's expecting, everyone and their mother, brother, and sister out here that's buying and selling is expecting the all-time spring season rally. However, MMTs, as I've instructed my big players, is that what everyone's expecting is a perfect time to start letting it set up and get net short on those pullbacks. Bam, when they pull back, you're short. Bam, it'll pop back up. And that's the kind of thing that we're going to be going through. That's what 2011 is about. I wrote about 2011. I've given my live analysis about what 2011 would be. In the first half, however, when the majority of the crowd is looking for the same thing to happen, that's when we're going to get a pullback. We're overbought. We're going to take a look and see what happens right over here in this area. We're going to see if we can get above certain areas, if we can close above and run right up into this trend line, or right there at that, right below that 12.5. That's going to pull that up. That's going to make us more overbought. And things have changed. I said years ago that this whole market would change and change forever as it is. So basically, this is the congested area. This is what the general public will be looking at. And now it's time to start getting it on. It's got a nice bullish tone to it. However, there will be a pullback. These are all standard technical analysis indicators versus the platform here is the MMTs. And ours already has everything priced right in here. And we can see right here in our delta ranges where we're at, we're going to hit a certain area up here. So we're going to be taking a look to see what happens at 12,500 on the Dow Jones.